Well, for a second day, the Australian share market's gotten off to a pretty scratchy start. As we approach lunch on Thursday, the ASX 200 is down by around 11 points, or around 0.2%. And so a part of that has got a fair bit to do with what we saw in the US earlier this morning. The US Fed left interest rates on hold, but they had a pretty optimistic outlook as far as the economy is concerned, and the scene is certainly set for a rate increase in September. And probably the thing that stands out the most was just a little bit of syntax. The way they were describing the US economy was in terms of strong growth. Previously, it was solid growth that was the descriptor. So what we saw is that interest rates tended to move higher. The US dollar rose as a result, and that saw downward pressure on commodity prices. And that's what we're feeling as far as the local share market is concerned. It's sort of the mirror reverse of what happened yesterday, where the banks were weaker, but gains for the resource sector were able to balance that out to an extent. But over the course of the European evening, we saw lower metals prices because of that firmer US dollar. So copper and nickel were down in the range of around 2 to 3%. So that gives you a sense of why miners are lower as a group, including gold miners. Rio Tinto is down by around 3.5%. That's the marquee earnings result that's being looked at the moment. They reported after the market closed yesterday, and the features were really the bigger buyback. They added to their existing share buyback, and the dividend was higher than expected as well. But pre-tax earnings were a bit of a miss, and that is why the shares have been marked down over the course of the last 24 hours. They were lower in London trade, and they're down by around 3.5% today. And the Aussie dollar is holding up quite well in the context of a firming US dollar. It's still just above 74 US cents.